I do want to get your thoughts on what's happened over the last 5 days. Many of your peers in the oil and gas sector have actually said that it's been quite hectic for them. Actually, is it similar right now for TotalEnergies? And how are you viewing these concerning events that seem to be getting worse especially when we're talking about the conflict between Israel and Iran right now?
I mean, I will not comment the decision of Israel to attack Iran. What it shows is that this region is very important for the oil and gas markets, because 20% of the oil exports come from this region and 20% of the LNG is coming from Qatar. So, you know, so of course any events which could affect oil and gas installations in the region would affect the global markets. TotalEnergies, we are involved heavily. We are the largest international oil companies in the region. We were born 100 years ago in Iraq, and we still have operations in Iraq, Abu Dhabi, Qatar, and Saudi Arabia. Of course, for the CEOs, the first concern is the security of our people. So since Saturday morning, we have, of course, taken care of our people. They are safe today. We are controlled. We have people in Iraq, in the south of Iraq, which is, of course, not far from Iran. And it's also people, but in all the region, because, and I hope it will not be the case, that the attacks will not concern, I would say, oil and gas installations, because this could become a real dramatic hit, not only in terms of safety and hazards and risks, but also in terms of impacts on the global markets. So, of course, we are not in control. We monitor that as much as we can on our level, and we follow that very carefully. I would say at this stage, when you look to the markets are relatively quiet. I mean, the oil price went up to $75, not yet at 80 like the year before. So that means that people still consider that I would say the conflict is there. It's a new step in the conflict, but it's still somewhere measured in the way it's happened. We'll see what could be the development.
All right. You know, this reminds me of 3 years ago when the Russia-Ukraine invasion started. Actually, a lot of questions were raised about whether or not energy systems and infrastructures are indeed secure. And do you think that the same questions can be raised about the state and the fragility or lack thereof of energy security right now?
It is the same, you know, again, if you remember well, by that time the oil markets were not really impacted. It was because quickly, even if you have to redirect some flows and tankers because Europe does not buy any more Russian oil. But globally the market remained almost intact. On the gas side, on the contrary, the LNG price went to the roof because suddenly Europe were starved of Russian gas, was obliged to buy a lot of LNG. And that has been done, by the way, at the expense of Asian countries, and the price went to the roof. So all that, it has been stabilized because the infrastructures have been built. And so again, we are today, I would say, gas price remain quite high, but reasonable. So, you know, if suddenly we have a strong event, I don't know if a big installation in Saudi Arabia or in Abu Dhabi or in Qatar is affected by some strikes, then you could see immediately some impacts on the markets. That's why I think it's more reasonable to try to avoid these energy installations in this conflict. But the target is not the energy installations. The target are more the nuclear installation from Iran, from Israel.
And but the concern also is that if these attacks actually perhaps compromise some of these energy installations and infrastructures, it could pose problems. And again, it shows just how volatile things have been, because before the attack, there was a question about slumping demand in oil, and now it seems we're on the other side of the coin at the moment. Yeah. How are you making, I know that dealing with price volatility is important
for you. The market, it's 100 million barrels per day. Yeah. If you move 1 million is a lot. Yeah. If you move 1 million, immediately the market, and suddenly, if it's sudden, 1 million barrels per day will impact your market. So we speak there potentially of much more than that. So that's why the markets are nervous, because again, if the Strait of Hormuz was closed, which we are far from that today, it could affect 20% of the global export market. So that obviously would have an impact on the market. So the markets are, yes, there is a debate about is it demand is slowing down because of the macro is not too good, but you have also good supply, so it's going, the markets were bearish. But again, if you have disruption, immediately you react in the other way. That's part of the difficulty for trading. Trading is not an easy job today.
Absolutely, and dealing with price volatility seems to be front of mind and the first requirement for CEOs in the oil and gas space like yourself. I want to talk about
CEOs in the oil industry. Our job is not to control volatility. Our job is to lower the break-even. TotalEnergies is $25 per barrel. So of course I prefer high price, but my job is to have a profitable company I would say in most of the environments. That's what we are working for.